Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is March 1st, 2023. This is Morning Forex Report, where I take a look at some of the major currency pairs from a technical perspective. Let's get started. We will start by taking a look at the euro versus US dollar, and we are seeing upside momentum here in this currency pair. We saw the market initially move lower in the early Asian session. That continued the move to the downside after breaking back below the 100-hour moving average. That's a blue line in this chart yesterday, and also falling below this swing area ahead of the extreme that we saw on Monday's trade. But the momentum faded, and we started to move back above the 100-hour moving average. The sellers turned to buyers back again, and we forced the market to the upside here. This was helped by China data, which saw that their manufacturing PMI rose back above 50 level, and one of the measures of manufacturing was the highest level in a decade. And so we saw the price of the yuan move to the upside, and we saw the dollar move to the downside, and that helped to propel the euro versus US dollar to the upside as well, breaking above the 200-hour moving average in the process, and also above this swing area here, where we had a number of different swing lows through here, and then reversed to swing highs through here, and then back again to swing lows through here on the ups and downs. We've been below this swing area since last week, and on our way to our new cycle low before rotating back to the upside. Getting back above that level is where we are right now, and as you can see, the price is coming a little bit off the high prices that we saw today in the current hourly bar, and we're going to look for support near the 106.53 up to 68 level. If this level is going to hold support, then we have the potential to move back up toward this other swing area, and also, more importantly, the 38.2% retracement. That's of the move down from the February high right here to the February low right here. That level comes in at 107.229, so keep that level in mind on the top side. In the short term, for traders looking for more upside, we have to see the price find support near the 1.0653 going in trading today, if the bias is going to remain to the upside. Taking a look at the dollar yen, I'm going to focus on the hourly chart. And if we look at the hourly chart, what do we notice? Well, we have this support from last week. That was last week's low, where it come in against the 200-hour moving average. And what do we do in trading here today? Broke below the 100 and moved back down to the 200-hour moving average, where we found willing buyers. That levels also corresponds roughly with this swing area through here, where we had some swing highs and lows, and so there was a couple of reasons why the market found support against that level, and we are seeing a rotation back to the upside. Now, what from a technical perspective, what the buyers would want to see against the 200-hour moving average is move back above the 100-hour moving average. Recall from yesterday, the price came down toward that 100-hour moving average and found support and risk defining buyers leaning against that level. The price moved back to the upside into the close, and saw a little bit more of a rotation to the upside in the early Asian session before falling to the downside, helped again by that China news and overall dollar selling bias. So we did see the rotation back down to the 200, but we are seeing a rotation back up toward the 100-hour moving average. Watch those levels. Those will be our barometers for that currency pair. Let's take a look at the sterling versus US dollar on the hourly basis, and we've seen less of a move to the upside. It's certainly compared to the euro versus US dollar, maybe the dollar versus yen, or for the dollar selling perspective. This was helped by comments from Bailey, which were more neutral in his speech today. As you can see, however, the price came down and tested this swing area through here, where we have where it was a number of different swing lows and swing highs in this vicinity, this yellow area, and we are finding some support buyers against that level currently at the moment. And if the price is able to move below that level, that would open the door for a retest of the key 100-day moving average. That's this blue line right through here. not very good at drawing those circles. 1.19599 is where that level comes in. Also, it's near this swing area here where you swing low, swing high, and then swing highs through here before breaking to the upside in trading on Monday. So this level area right here is going to be a key level if we're able to break below the 120 10 level down to 119.88. So right around the 120 level, that would be key for the sterling versus US dollar. Finally, I want to take a look at the dollar versus Canada quickly on the hourly chart. And what we notice here about this currency pair is in trading yesterday, the market tried to break below the 100-hour moving average, but could not succeed after 1, 2, 3 hourly bars. In trading here today, we tried to break below the 100-hour moving average again, and once again finding support buyers against that level on Monday's trade. We did break below that level, and we saw some additional momentum to the downside, but it was quickly reversed and reestablished support against the 100-hour moving average in early trading yesterday before once again testing it here and testing it here. So we are finding support against the 100-hour moving average in the dollar versus Canada. That's a key barometer for buyers and sellers in trading today and going forward. So be aware, be prepared. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.